I just, reached out to one of my friends who said, AI is going to come, it's going to take all the jobs and humans will have nothing else to do. Fundamentally disagree with that opinion. Like, I don't think anything could be further from the truth. But we have to tell the truth. And Asuquo and Taylor, you both are right. Will AI take jobs or eliminate jobs? Absolutely.
I get it. It's difficult. And at this time, there's so much volatility. I still think general sentiment that I'm hearing around is it's still a seller's market, more demand than there is inventory, which will lead the case for higher home prices.
Hello, welcome to episode 3 of the Wealth Wave podcast. My name is Caleb Solomon, the co-founder of Jara Capital, and I'm here with my co-founder and co-host Toyyib Morakinyo. How's it going, my brother?
I'm doing well, man. Exciting day. Certainly looking forward to this conversation. We've got some amazing guests, so let's do it.
Awesome. Well, I want to take up with the bios for Taylor and Asuquo.
Absolutely. Today's going to be entertaining. We've got some amazing guests, and let me first start by saying we've got Taylor Robinson, who is an associate consultant at a top consultant firm. She's got a passion for sustaining and creating transformative change, a background in aerospace manufacturing, and having also recently led the Washington Commanders through strategic change. Taylor focuses on moving organization to rapid success at scale. She's an avid pool player, gardener, and home cook. Taylor, thank you so much for joining us.
Of course. Thank you. Thank you for the invitation. I'm excited to be here.
Absolutely. I'm reading through that background. I hear aerospace manufacturing. I said, yep, let's do it. That's something we got in common. So I love it. It's my fellow engineer. And as well, we've got Asuquo Mfon as well on the call with us today, who's also another stellar associate partner at a top consulting firm. He's an avid investor, real estate advisor. He focuses on strategies to maximize the use of assets and resources to improve livelihoods and community connectivity. Asuquo, thank you so much for joining. How's it going?
I'm doing well. Glad to be here. Excited to dig in and discuss with you all.
Yeah, and again, just to provide some quick, a background about Asuquo. I think we met. When did we meet again? I think we met about a year ago or 2 years ago through a mutual friend who was in the real estate industry, and we're looking to find some ways to do some investments in the Dallas sector. So we're very excited to have him on the call to share his perspective about what is happening in the real estate industry vertical, and also about the economy and also technology. So we're excited to have you on this call.
Meeting today. Thanks for inviting me on.
Yeah. Pleasure is all ours. And again, just to reiterate, the purpose for the Wealth Wave podcast again is to provide insightful discussion around the economy, real estate, and technology. Again, our primary goal here is to educate, enlighten, and entertain our audience while inspiring you guys to take action. Today we have a fully packed agenda today, so we'll try to be very quick. So we'll highlight these topics in 3 segments. So the segment 1 will be about business perspective, where we're going to be talking about I think there were 2 articles that came out this week around the retail sales jump, and also investors being bullish about rate cuts happening this year. We'll double click on that. Also, in terms of the segment 2, we'll be centering around technology trends today. The biggest trend happening, I think for the past 2 years have been around generative AI. What does it mean to small businesses? And also how can small businesses leverage that technology to transform their businesses? And number 3, we'll talk about real estate insights, especially the housing market, and how and whether it makes sense for you to invest or buy a home today, or wait and see for the federal government to reduce the interest rate to make it more affordable to you. So we have a fully packed agenda today. So before we jump in, I wanted to share some few. There's an article to provide some context. Let me share my screen real quick, and then we could double click on the themes that we're going to be discussing for today's call. Okay, so as you can see here, I think there's an article that came last week. It said holiday sales climb, boosting retailer hopes that shoppers will spend during uncertainty in 2024. And as we can see here, I think holiday sales rose 3.8% year over year to close to $1 trillion. So it means that and the consumer sentiment is really, really strong. And also, there's an article, and in the article, it said that despite the solid peak seasons, economists and retailers are weighing whether consumers' resilience will continue in 2024. The new year brings dynamics that could drive or dampen spending, such as divisive presidential election cycle, cooling inflation, and the Federal Reserve decision about whether or not to cut interest rates. Also, retailers are also navigating, supply chain disruption, and also the Red Sea raised a higher rates of high energy and shipping costs. So, with this, as a background, juxtaposing this with this article from the Investopedia said investors are also getting more bullish on stocks as they anticipate Fed rate cuts. Service shows here. So the first article talks about stronger consumer spend in terms of retail sales trending higher, and also investors are also bullish that Fed is going to cut rates. So from this, given these two articles that we have here today, maybe I'll start with Taylor first. Ladies first. I'd like to get your thoughts about, do we believe, or from your perspective, do you think that the federal government is going to capitulate to the market and reduce rates, even though inflation it's come down, but it's still relatively high pre-pandemic?
Yeah, I think it's a great question. I find it interesting that there are so many different things, like dynamics going on in this year. I mean, you mentioned already you have the Fed potentially decreasing rates this year, but it's also an election cycle. And typically election cycles, while still can be positive, they are a little bit lower in return than other years. And then you also have the increased shipping costs with the turmoil happening in the Red Sea. So it can make for an interesting year. My thought is that I can still see the Fed decreasing rates. I mean, they had mentioned last year them doing so 2 or 3, like a handful of times. So them doing it once or twice is possible. But I don't necessarily think it could be we'll see as good of a return as we did last year, just given all the things that are happening right now. I don't claim to be an economist by any means, but there is so much happening right now. I can still see that kind of dampering down the returns.
Okay, so we have Taylor forecasting the potential interest rate cuts given the market. Toyyib, what do you say?
Say to Taylor's point there, do you have any guess or best guesstimate on a potential quarter when you're thinking about when this could potentially happen?
Yeah, that's a good question.
Yeah, sooner rather than later. I mean, it's best guess. I'd say once we start getting closer to the election, I could see things really starting to pick up in terms of just uncertainty and volatility. So if they were, my guess would probably be Q1, Q2.
Okay.
So I've got written down here yes as well to your point, but I've got Q3. I think it's really the back half. So I think overall, Caleb, to your point, one, I think the economy is still very strong. When we talk about like consumer spending, people are still spending money. So hey, the economy is still staying strong. But at the end of last year, the Fed, Jerome Powell came out and said, I think we're going to hold interest rates steady. And people thought also that he might be signaling that we might cut rates by the back half of this year. There's actually a quote, part of his statement was around, he mentions, while we believe that our policy hikes is likely at or near the peak of this current cycle, ongoing progress towards 2% inflation objective is not assured. So I feel like overall people feel like there's this certainty that we are definitely getting the rate cuts, but I'm not fully in the group that it's going to be Q1 or Q2. I'm thinking it's actually Q3 or Q4. Factoring in Asuquo, we might have more conversation if you agree if it's early or not. But one, if I look at how strong the economy is, and I'm constantly looking at that, if you saw Q3 GDP growth of last year kind of grew closer to 5%, which is a higher estimate than I think what forecasters are predicted earlier. So that's interesting. So the economy is still good. The labor market, right? Unemployment is still relatively low. I think the latest number is at like 3.7. So that's still low. It's not like increasingly high that people thought we'd be in some kind of recession now. And then the last pace, December inflation closed at 3.4%. So we're not at 2% yet. Are the Feds feeling some pressure? I believe so. Do I think they will capitulate? Yes. Q3, Q4 is my forecast.
Okay. Well, Asuquo, do you agree, disagree? Do you think?
I love Toyyib's points. I mean, he makes a really good argument. I'm in agreement with both Taylor and Toyyib in the sense that I think the Feds will cut rates. I think it's going to be earlier than Q3 or Q4 just because of Taylor's point around the election, right? The election is going to be in November. I think they would want to see some of the tailwinds from the rate cuts happening before the elections happen, and it can actually sway emotion and sentiment. So for that reason, I think it'll be probably like Q2, right? Early Q2 actually, around my birthday, May 6th.
That's what motivates.
Well, that's a good birthday present for you, I guess. But I think again, like you guys making a very solid arguments around. Yes, there's from a geopolitical perspective or the election perspective. Yes, the Fed is incentivized to cut rates. That is a good point. Also, the Treasury yields. And I'll probably share my screen to show you the Treasury yields today. That's a predictor for recession. So the government will be incentivized to do something about it. I think now, if you look at a 3-month Treasury, it's at 5.34%, and the 10 years for it's at 4.12. So it's an inversion in the yield curve, and typically it's a signal that there's potentially a recession coming in the horizon. So all this makes sense. However, where I stand is around geopolitics, number one. So if you look at the Middle East war, the Ukraine-Russia war, and also potential for China encroaching on Taiwan, it's going to cause huge disruption in supply chain, which means that things are going to be expensive. So if things are expensive, why should the Fed cut rates? Jerome Powell said that our goal is 2% inflation. Yes, we've done a great job bringing it down substantially, but have they actually reached the target? It's still TBD. We don't know yet. So that's number one. Number two is around housing being the core driver for CPI. Look at the consumer pricing, the housing, the core driver, and given that the Fed funds rate is obviously extremely high, and there's limited inventory in the system, and we need raw materials to build. The developers are not incentivized to build anything, so it's going to keep things higher, which means that the two levers that the Fed has is around keep jacking up interest rates. Unless I guess I'm neutral in the sense that I'm not. Go ahead, Toyyib.
No, you're neutral, but Taylor and Asuquo has mentioned it is we do have an election coming up, right? And so there is, whether we want to admit it or not, there is some of that political pressure. Inflation overall, I have started to decline. Right, I said it closed in December at 3.4%. Overall, I feel like there is this consumer sentiment, and even I think the Feds overall have just signaled the sense that we will get in there under more control than at any point during this cycle. And I think we're all close to a peak. So I'm leaning towards they've held it steady. I think two or three times now in terms of the rates. I do think we're going to see decline. Asuquo and Taylor, I don't know if you want to add anything else there.
The other thing I'll add is just like from an investor's mindset and lens, like, there's a ton of investors, both in real estate, but also even in private equity, that are just sitting on their reserves, right? They're not actually doing business as a result and haven't been doing for like 18 months now. That's also, those guys will probably be applying some pressure. And then secondly, there are going to be a lot of people that their loans are going to be ballooning and coming due. And they took the loans when the rates were like, what, 2%, 3%. Nobody could have ever thought that, they'd be 3x what it is right now. So there's going to be a lot of carnage, right? That I think the Fed will want to like, not save, but like at least like, help a little bit so that it's not so significant, the type of losses that the market is going to expect if people are, can't basically, they just have to walk away from their assets because they can't afford the interest rates anymore.
Yeah, in my opinion, I think the biggest mistake that Jerome Powell made was, signaling to the market that we're going to cut rates, because now they price it in. And again, respectfully, the last person that I like to put my faith in is the government, because whenever they say they're going to do something, they don't do it. So I would have rather, he'd have kept the chip to himself and not publicly said it to the market. So the market assumed that, hey, it's still going to be higher for longer. Yeah. But now that he said it, I'm not sure if he can come through. If again, geopolitics wise, supply chain things are getting expensive, and again, the strength of the consumer is spending. They spend almost $1 trillion in December. Christmas. So why should they cut rates if the consumer has no slowdown in terms of their spending? So that is what I'm
I mean,
thinking.
I know
So,
it comes later in the session today, but the housing market, right? It's so hard for people to want to buy a house, and cutting rates will have very large impact on that. And we'll talk about that a little bit later. But I think that's
mhm.
something to consider as well, the pressure of new home buyers wanting to get into the market and just rates being so out of control right now.
Yeah.
Yeah, no, that's a great point. But Caleb, I think you hit it right on the head in terms of when you said by revealing, I think by signaling at the end of last year, I feel like the market. It's funny, part of my notes I have like it's already priced in. So if you saw like
Mm-hmm.
interest rates peaked at what 8.2% in
Mm-hmm.
October, and now we're down to maybe 6.25% at this point. So interest rates, right, mortgage rates. That's right. I started to decline already. So the market is almost reacting like we have this cuts.
Yeah.
It's already guaranteed, right? The stock market ended on a high in December. We're off to a decent start earlier this year. There's a sense that hey, we've avoided the idea of the recession. I think unemployment is not going to go up significantly, and we're going to get those rate cuts. Life is just great, so let's go spend $1 billion over the holiday season, and the good times is getting ready to roll.
Which is
Yeah.
why I think the rate cuts are going to happen sooner rather than later. I do think it could be tempered down to your point, Caleb, by the geopolitics. I've already heard about how the Houthis and everything that's happening in the Red Sea, ships and trades have to be directed around the Cape of Africa to get to Europe now, which is
Yeah.
increasing costs. So I could see that that'll potentially delay how much the rates get cut. But to your point, Toyyib, I still think we're going to see it. We want to fan that a little bit.
Well, I hope so because listen, I think as Asuquo said, we have some investments, so if they can, cut the rates aggressively, that will really help, especially for those with floating debt. They can hope potentially, help to subsidize their cost, and for those with long-term debt, they can refinance. So it's going to be interesting. So I guess delving into the next topic around the housing. Or did you have something you wanted to say?
No, I was just going to ask, Asuquo had talked about, investors maybe being on the sideline. So, right, there's always the question, I think, as an investor, you're thinking it's hard to time the market anyways, but when is the right time to deploy the capital to preempt the market in some ways, right? So you can hedge, so you can get better returns, even though where interest rates are today. If I think they're going to be 2-3 cuts by the end of the year, do I start deploying capital now, or do I continue to sit on cash?
That's a great question. Yeah.
We've got people who've got 200-300, if yield today is 5+ percentage, I mean, that's a really nice return if I'm just sitting on cash. So as an investor, are you advising people to start deploying capital now, or wait till the cut starts?
Yeah, I mean, I'm not trying. I don't advise people to time the market just because, we're not psychic here. But I think like what I try to do instead is be opportunistic, right? There's always a deal in every type of market, and so I'm always looking. And so what I advise my clients to do is basically just to have sound fundamentals when assessing deals, right? And look for things that pencil, right? And that can be underwritten and also have some buffer in case things go south, right? So with that's the mentality that I've taken, throughout my years of investing, when it's been good, when it's been bad, and it's always panned out. I don't really try to time the market. I don't know if others have different opinions on the call.
No, I mean that's a good point. I think Warren Buffett had a point about it's not about timing the market, but it's about the timing the market. So you need to understand the time that you're in the market. And I always want to go back to fundamental principles. Look at the business and figure out, based on the current market. And I'll probably, dovetail that into the next topic around the housing. I'll share my screen real quick, and then because that's a great question you asked about. No, I think I wanted to, dovetail that into housing because that, leads to, it flows perfectly in there. So I'll share my screen real quick. There's an article that came out in the Investopedia. It talked about new housing construction dip in December, but permits rose. It said housing start in December came in 4.3% lower than the prior month, when they surged 11%, but they were 7% higher the same month last year. The 1.4 million housing starts were better than 1.3. So a lot of people are building. So rising building permits indicates builders plan more construction. As activity remains near pre-pandemic levels, an analyst said. And as when we look at the FRED, which is the single source of truth for all data from the United States and around a data perspective, it said the housing inventory kind of like it went up a little bit, but ticked down. And also when we look at the the monthly home purchases made by investors and non-investors from January 2019 to 2023. So the blue line is the investor purchases. It's been trending downwards. And last but not the least, I wanted to show this before. Here that was around the annual rent cost to gross income ratio. So if you look at 2022, 40.1% in terms of the renters, the amount of spend on their gross income, 40%, and 2023 is 40.6. So it's going up, not down. So with this, given that we talked about the economy, potential recession could potentially affect interest rates, which could make things affordable. Knowing that inventory is trending down by the graph that I sent to you, is it the right time to purchase a home today? Do we time the market? Do we wait for things to settle down? Like, when is the best time to I guess buy? So, and I'll yield the floor to Taylor to go ahead and tackle this.
I mean, it's like what Asuquo said. It's hard to time the market, right?
Yeah.
And now you're thinking, and I can understand that, and people not wanting to sell their homes and buy a new home given the higher rates right now. We just talked about how rates could potentially be decreased and be cut, which could lend towards lower mortgage interest rates. So you're thinking Q3, Q4, but we'll see. Maybe this year has some potential for that, but I think generally it might make sense just to wait it out and see how things turn around. Unless you run the numbers. If you run the numbers, you find a home that works for you and your situation, by all means, go purchase. But you have to be very clear on, like, does it make sense given your income? Does it make sense given your financial goals, your life goals? And if it does, then go ahead and purchase.
Yeah, let me build on that. I think the question is quite nuanced when you answer it, because it depends on what type of buyer you are, right? Like, so if Taylor seems to have been speaking about someone who's buying as a primary, right? But there's also, like, if you're buying an investment property, I think similar principles apply. But for the primary, there's an element of your personal goals, like Taylor was saying. There's an element of emotion. There's an element of wanting to put your roots down, and your personal budget, right? So if you can afford the higher mortgage, you can put down the down payment. Some people are saying, you know what, I'm tired of waiting, and I really want to get in a home, and I'm going to do it. And I know that in the future I might be able to refinance. But what I do know is, like, I'm unlikely that I can get a lower priced home, right? So some people are going into it with that perspective, and sometimes it makes sense to buy now under those parameters. And then from an investor, is more along the lines of what I was saying, which is like, look, a deal looks a certain way. Put it in a model. Can it be underwritten? What's your debt service coverage ratio looking like? If you don't hit your revenue targets, are you underwater? Like, what's happening? And if everything pencils out, and you can actually get it underwritten, because nowadays lenders are extremely stringent, right? So if a lender is actually going to underwrite it, that's also a good sign, right? And so for me, from that perspective, for an investor, it's it just depends. Does the deal make sense? And if so, yeah, go into it. And it's very hard. It's very hard these days to find deals that make sense, right?
Very, very
It is hard, and I do. And I think also it's also hard to find money as well, because the regional banks. I think if you look at the Silicon Valley Bank, what happened? The contagion, they call it, that happened last year, and it went bankrupt, and the government had to come in to shore up their financials. Now, regional banks or banks in general are very they are doing their due diligence in terms of how much they can give to investors. So you need to either come in with lots of equity on the table, or you need to have a fantastic business plan that you can present to them for them to actually invest. So again, now the question is maybe I'll rephrase the question again. I know, I think on the first podcast, we had this huge debate about buying a home or renting. Again, I showed you the data. 40.1% was in 2022, and 40.6% of their gross income is going to rent. So what does the average person do today, Toyyib? Like, should they keep?
It's you asked the question,
should they
right?
buy?
But to Taylor's point, if we're talking about the average person who's buying like a single family home for their family, is now a right time to buy? I've got yes, especially considering your family needs, of course. Yes, for your family needs in current environment, personally, I think mortgage rates has peaked, right? October of last year, when was at, I think 8% plus. That's peaked. Now we're already at 6. Like I said, last time I checked 2 nights ago was 6.625 for a 30-year fixed mortgage. So interest rates have started to come down. But I think we have to break the news. Prices are not coming down like that in the ways people think. I have got some friends who wants to buy a home for themselves and their family, and they're thinking, oh man, we're going to get this big recession and everything's just going to plummet. Prices are going to go down in the single family market space, and I'll be able to get a nice home for me and my family. I don't see the event if that happens. And if in event that something like that does happen, what's to say that we'll all be in a position to actually buy a home in those environments? So it's always that double-edged sort of, I want something that, the housing market will crash. Well, if that happens, listen, unemployment rate skyrockets, and who knows who might be employed during those times, right? So prices are not coming down. Mortgage rates are coming down in some ways, but builders are starting to build, and people who have 2 to 3% mortgage rates, I think Taylor had mentioned, those people do not feel like selling their homes, right? There's a sense of, I've got 2-3% in my mortgage rates. Why would I sell and go buy something at 6-7%? So the inventory for people who already own homes or selling, that's already shrinking. It's new constructions are becoming the new supply in the markets. And these builders, prices came down a little bit, I think, end of last year, but now I've seen them slowly start to creep back up. I take that to say, hey, if you're in the market for a personal house for yourself and your family, look at your financials, look at your current housing situations, see if you can meet the mortgage or the monthly payments, work with a credible agent and lender, and go buy the home and take care of yourself and family. But I don't see prices coming down significantly. I'll tell you that.
Would you still say Q1 purchase home, Toyyib, or Q3, Q4 when the rates might come down? What do you think?
So if the signals already that things are starting to trend down, I'm Q1, Q2. I'm trying to get there early. If I have to refinance in two years or so, maybe I would. But if you're in position to do it now, Q1, Q2, why I think the market is still softening a little bit, I would do it now, I think.
I think what's interesting, you make good points about purchasing now. Mortgage rates have definitely gone down compared to the peak last year. But I do want to definitely encourage people to run the numbers. Really sit down and run the numbers, because while rent is showing 40% of your income, the monthly rent that you pay, that will be the max that you will put towards your housing for the entire year. Like multiply it times 12, that will be your max. And yes, you might have to re-sign the rent lease and it might go up, but it's still going to be your max. The mortgage, that's going to be your minimum that you're going to have to pay throughout the year. You have to also include property taxes. You have to also include homeowners insurance and PMI insurance, which for those that don't know, it could be an additional insurance you have until you own like 20% of your equity or something like that. And then maybe HOA fees for not condos, which can always go up too. So really sit down and think about, it might be a good time from a mortgage rate perspective, but you will have all these extra maybe phantom costs floating around. Something breaks in the house you have to pay for. So just really be aware that you are able to cover that. And if you are, then yes, I can say go purchase.
Yeah, and again, you guys make great points again about the supply and demand dynamics. There's less homes in the market and more people, and I know, especially in the Texas market or Dallas, given the loss of migration from the Northeast and also from the West to Dallas and Florida, there's a lot of people looking for homes, and they can have I think in Dallas there's a gap of 100,000 units. 100,000 units gap. So it's actually driving up the cost of rent in here. And also inventory is low as well, given the supply chain and things are just expensive. But again, my thing is, if I'm predicting that there's going to be no change in forecast, maybe I don't think I had my answer in the previous segment. I don't think there's going to be no cuts. I think the Fed is going to panic and they're going to flinch. There's not going to be.
They're going to hold steady throughout the year. Is that what you're saying?
They're going to hold steady throughout. It's going to be higher for longer. The cut is probably going to happen in 2025. That's my opinion. When the new president or whoever becomes president want to juice up the economy, they probably, so that's where I stand. So if my hypothesis is, let's say, accurate, like it's going to be higher for longer, then I think it makes sense for you to just rent. There's dignity in renting just as there's dignity in owning a home. You don't have to. I understand that friends, a lot of people want to be like, oh, I own a home, flashing up on Instagram. Guys, listen, there's no difference in renting.
Yeah, come and get you.
there was something interesting I read once, and it said that for renters, the highest amount you're going to pay to live in that home is your rent. And for homeowners, the lowest amount you're ever going to pay for a month is that mortgage.
True, that
That's
mortgage.
Taylor's
Just
point.
like,
Yep.
there's
That's
going to
Taylor's
be
point.
HOA,
Yep.
there's going to be landscaping, there's going to be things that come up, and so homeownership definitely has it's the baggage that goes along with it. So yes, there is dignity in renting, and you just need to be smart and make financially sound decisions for you and your family.
I think
Yeah, I
it
mean,
goes back. Sorry, go ahead, Caleb.
no, go ahead, Taylor. Finish.
I was gonna say, I think that we as a society, we've been always told growing up the American dream, right? You work hard, you get a good job, you get that house with the white picket fence and a dog and all that stuff. And it's like that's what we've been taught and socialized to think that's how you made it. But if you really think about it, it's like your success, like what you want for yourself, that's for you to decide at the end of the day. And maybe that's renting. Maybe that's having that flexibility to up and move after a year. Maybe you don't know where you want to live yet, right? And so it's really kind of challenging that notion of where is this coming from? Why do I feel like I need this house? I get that it's a very strong emotional sentiment around home ownership, but really challenge that and see. Because like I said, like you said, Caleb, I agree. There's dignity in renting. That's fine. That's totally fine, especially in today's economy. Oh my God.
Yeah, I agree. And also, I think at the end of the day, maybe back in I think I was telling to you that when the Richard Nixon took the dollar of the gold standard, money became valueless. So now the rules of engagement, if you own a house back in the 90s, it's probably a good investment. But now, in my opinion, I think now starting a business, figuring out what your gifts are and deploying your gifts to serve the world is more of the American dream. Because why? Now you can build a business, side business, and use that money to have flexibility to travel, to do whatever you want to do with your family. So I think flexibility is the new wealth, in my opinion. Being able to, if you want to quit your job because you have some skill set that you have that you can build a side gig. I think that is the new American dream versus owning a structure in one particular spot. Toyyib.
Yeah, no, I'm saying I guess I'll go take down the house with the white picket fence here off my vision board. Now that Taylor's challenging me to think about where does that come from.
If that's your goal,
I'll bring it down.
Just know why. Congratulations.
It's very interesting. Well, so I think is there anything that we missed on this topic, on this housing?
No, the market is dynamic. I think Asuquo and Taylor, you both have given great points around. Hey, you need to understand what's your situation with you and your family. Run the numbers. Hey, renting is the max, but mortgage payments, that's the minimum. And tax, anybody who owns properties know, hey, tax properties these days, they don't come down, right? They keep going up and up, and so every year it gets even more in terms of what you end up having to pay. So you got to run the numbers and do what's right for you and your family without the social pressure of, oh, I need to own a home, because that's what the American dream is. So I agree there.
Awesome. Well, now we can jump to the next topics around AI. Everybody's excited about AI today. I think it started, and the term generative AI. I know that McKinsey, which is a firm that everybody knows about, have a lot of documents around AI today. Bain and Company, Boston Consulting Group. I've been reading a lot about some of their articles today. But obviously, we know that this week, or was it last week, was the World Economic Forum, or what I call the Davos, where the surplus elites meet up to discuss policies for the world. It's quite interesting. But nonetheless, the topic of AI was very prevalent there, and I'll read some quick bullet points here. And it said AI is rapidly transforming businesses of all sizes worldwide, and it can be especially beneficial for mid-market companies. And I'll read the third bullet point, which says that a diverse selection of mid-market company leaders from around the world share how they are using AI to expand their business operations. So with that, Taylor, given that you work for a prestigious consulting firm, and you tackle this, topic around AI. Can you maybe, if you would like to maybe break it down, what AI is and why are people talking about it today? Like, why is it important today for businesses?
Yeah, that's a great question. I would preface this by saying AI, artificial intelligence, is this umbrella term of basically using machines and technology to do things that humans can do, but faster, better, more efficiently, more predictively. And AI, specifically generative AI, and what that is like, think ChatGPT, AI being able to create something new based off of a prompt that you give it. It's creating that to you. It has the potential for just completely new change and unlocking productivity like we haven't seen before. Probably the last time we've seen this amount of productivity generated was like the release of like the internet and maybe like cell phones, things like that. It's what is being talked about pretty much across every boardroom. How can we leverage artificial intelligence? How can we leverage generative AI? How can we leverage machine learning? All these like fancy buzzword type things, but it's real. Like there's validity to determining what makes sense for you in your business, regardless of what scale or what size that you are at, and even industry, across industries. You know, anything from focusing on manufacturing, going back to aerospace manufacturing, and how can we make this product more efficiently, more effectively to a service, you know, banking, insurance, that kind of thing. And how do you really improve the customer experience? So I think we are at the precipice of a new unlock of productivity. We don't really quite know what it will look like because there's just so much room for achievement here, but it's exciting time. And it's worth having, like, definitely worth having conversations for those of us who are like in businesses, work for businesses. It'll be like the forefront.
Awesome. Asuquo, want to double click on that?
Building on that, I mean, I think like obviously like AI, Gen AI, you know, is probably the most used word or letters in business in the last 365 days, but for good reason, as Taylor was just sharing. It's the potential is really like we don't even know what the potential is going to be, and I think that the use cases for it are extremely strong. I'm seeing it in my day-to-day in consulting, where we're using AI to make our jobs a little bit more efficient and effective. When I think about the real estate industry, which I spend a lot of time in, there's several use cases, especially when it comes to like some of the administrative tasks that you might think about, like reviewing leases or you know, completing transactions, which are just take a long time to do and are prone to errors. I think these are areas that AI can come in and not only streamline, improve productivity, but also improve accuracy and the quality of documents. I was reading an article not too long ago about a builder that collapsed, Story Builds, that's heavy in Texas, and the receiver that took all their documents and all their records was just sifting through a myriad of paperwork, and is just finding a bunch of things that don't make sense, a bunch of like errors, and just like how did they set up these structures, who owns what assets. And so that type of like documentation, if AI could power it, it will standardize how, you know, across the industry we're creating structures, across the industry we are documenting transactions, and it just would make even the process of receiving bankruptcy, completing transactions smoother, easier. You don't need like a rocket scientist to come figure out who owns what, right? So I just think like the use cases are enormous, the impact is enormous, and for every single industry, I would say that, you know, if you want to be a leader or in that industry, you need to be thinking about, you know, what use cases can you start applying AI to, even if from very little ones to big transformational ones.
And I agree. And before I pass the board to Toyyib, there was a report that McKinsey, you know, generated. I think it was 2 years ago. There were I think there were 4 main industry verticals that were not technology savvy or they were not adopting technology. Real engineering, construction, and real estate was dead last. Power and utilities, oil and gas, mining companies. So if any executives hopefully can listen to this podcast, as you're listening to this podcast, please don't get left behind. You guys, why? Because you guys have tons of data. Because why? AI is about, you know, learning and inference. How do we learn the data, and how do we make inferences from that data, and how do we generate insights from that data to help us with, you know, capital deployment, new product development, whatever the case may be. So I'm hoping that, you know, this industry vertical, I mean, they are legacy companies, they're old school, and it's fine. It's good to do things your way, but I think it's good that hopefully they can figure out where can we leverage AI in our industry, in our department, or in our org segment, to figure out how best to generate some productivity gains for the business. So Toyyib, I wanted to, you know, this say that as well, and maybe I wanted to get your thoughts about, how AI is transforming customer experience today, given that you have some experience in there. How are people using AI to help with the contact center, website
Yeah,
optimization,
absolutely.
or all that?
Absolutely. And telling Asuquo, I think, set it up really well that, this is a powerful tool and technology that it's really I've got it as an accelerant of productivity. So it's going to create, your leaders and your laggers, whether you want to embrace it or not, right? It's going to create meaningful separations in regardless of what industry we're talking about. And, I think about it as, I don't know if the echoes come on my side. Okay. Doing a cross-country road trip, right? From New York to California. Somebody's riding a horse. Somebody's got a private jet, a G550 Gulfstream, right? Somebody's definitely going to get there faster than the other person, right? And that's part of how I've started to think about, I think, the power of AI. In the you talk about the customer service part of it all, which is huge and super important. I think it's transforming business overall. In the contact centers these days, we're thinking about, do we need how many humans do we need to do this job in terms of just the basics? If you got a customer calling in today, what are the levels of questions that we can set up, right? The computer, the AI programmed, right, technologies to be able to answer and have some of these meaningful dialogue with the customer. I call in, I give my name, I have a conversation about what's my balance. Here's the issues I'm having. I might not even need to talk to an agent, right? The AI is programmed. It knows we can have some of those conversations. So that's one of the ways that we're seeing it. Two, I think in the contact center spaces, being able to quickly create transcripts on the ongoing conversation, decode it, and then give meaningful recommendations to the agent on how to handle that customer. So that has been super impactful. As somebody who, does that come from mine again? Sorry.
Yeah, I think it's from your end. Maybe wanna. No
As
worries.
somebody
Yes.
who used to run, I used to manage a team in a contact center space. If we had a technology like that where all my agents could see transcripts of the conversation with a displeased customer, and you can have a computer programming giving you recommendations and how to handle and solving it, resolution times, right? Average handle time goes down, customer satisfaction goes up, customer retention goes up, the company generates more money and increased productivity.
Listen,
It's
all this
funny
sounds good. No,
It's
go ahead,
funny you
Taylor.
mentioned customer contact centers because I'm in my day to day, I'm thinking through some use cases for that specifically. And one that's super interesting too is the ability to use generative AI on conversations with customers real time to give the agent advice on what to say next. So based off of what the problem is, the customer sentiment, what they're saying, generative AI can take all that and quickly then provide a recommended best practice for the agent. And like you said, that results in higher satisfaction for the customer, higher satisfaction for the employee. And this is all like in real time. And it's super interesting to think about how that's just customer contact centers. But again, we think about manufacturing, we think about other industries, we think about banking, we think about just all kinds of things and how we can be able to make decisions in real time. Like we really don't know how far this can take us, but like you said, Toyyib, it's important to figure out how to get on. We're not saying to go out and buy the latest and greatest fancy AI tool for your company. It's more of like take a small piece of the business that you feel really confident about the quality of the data, because the output of the tech is only going to be as good as the input of that data that's going in. So make sure it's good, clean data going in, something you can do like in a quick, couple month time span, a pilot use case, get a quick turnaround on the results, and then you scale from there. But it's important to start that process because it's going to take time to shift the cultural mindset of the business around we are embracing this technology in a way that makes sense for us and getting that buy-in from people at the company.
Listen, all this sounds good and dandy, but I'm hearing the productivity, which means that people are going to be impacted. Human beings might be losing their job. So, Taylor, from your perspective, should the employee today, a contact center employee, customer experience employee, be fearful of their job security? How should they navigate this? AI impact.
It's a nuanced discussion.
I'm so happy.
I mean, I would like to think perfect world we all can keep our jobs, but it is a business at the end of the day. I think it's a balance. I would say definitely lean into the AI and play around with ChatGPT. Get more comfortable with these tools. Educate yourself to the extent you can and try to get involved in those projects. But I mean, let's be real. It's a very real scenario where there might be some shifting of the work structure.
I think Taylor, I'll build on what you're saying. Is like, look, it's gonna. You can look at it as, hey, it's gonna take away customer service jobs, or you can also look at it like it's also gonna open up new jobs for new skills and new capabilities to be able to create these AI solutions. So I like what Taylor was going around. Lean into it. Look for ways to expand your skill sets. Like, the world is not static. There were a lot of people, many years ago who used to work in plants and were putting cars together. Now that's no longer the case, but then there's new skill sets that you need to learn to continue to improve productivity in anything that you're doing and to just advance, right? So I think there's going to be new jobs also that people can, like, look into and try to get into.
Well, you say new. What do you mean by new job? When you say new job, are you saying like basket weaving jobs? Or are you saying like career, like, because these are customer service jobs are high paying, and people are threatened. Like, people are scared. So, like, what should the base? I mean, I don't know, someone who believes that their AI might be taking their job away. Like, what should you tell them now if they actually listen? Asuquo, I'm a customer service rep. I'm scared of this AI. What should I do today? What will you tell them?
Tell them the truth, Asuquo.
To continue to develop, to continue to grow, to continue to become relevant, and make sure like their skill set is something that people are clamoring for, right? It's going to be a tough conversation. It's not going to be as simple as that, right? But I wouldn't shy away from the truth and say, hey, let's pray, right? Instead, I'll say, let's think about how do we improve your value proposition, right, to the broader market. Unfortunately, we live in a capitalist world, and that's just the way things work.
Yes, I mean, we are having, I think, the most important conversation or debate right now, which I can't wait. I was just, reached out to one of my friends who said, AI is going to come, it's going to take all the jobs, and humans will have nothing else to do. Fundamentally disagree with that opinion. I don't think anything could be further from the truth. But we have to tell the truth. And Asuquo and Taylor, you both are right. Will AI take jobs or eliminate jobs? Absolutely. But it will also create new opportunities. Whether we all like it or not, we have to. There's no such thing, I think, in a global or an evolving economy as a finished product, as a person. So if you're a contact center employee today, that doesn't mean that's not necessarily the only thing you're capable of doing. If that job doesn't exist, you have skill sets, you have experience and expertise, you can do something else, right? And 150 years ago, when horses was the main mode of transportation, and then cars came along, well, time to open up, mechanic shops and tire shops and learn how to change brakes, and so many other businesses and industry built on top of that. So people do not tie your identity to, I just want to be a call center person. Myself and Taylor, I've known you quite a while. We both evolved in our career journey, right? Like, we both started as aerospace engineers, and now, you're a consultant. I'm in the tech space. We're doing different things. If those specific jobs were to go away today, well, we've got skill sets and background and knowledge that can be translated to other parts and bring meaningful value. So I'm not as threatened about AI as much as I see it as an accelerant and augment tools, right? It's the Iron Man stepping into his suit. It's it's Bruce Wayne stepping into the Batman suit. Like, if you think about it as a tool to make you more productive and add more value to your customers, I think you're going to be fine overall. So I don't see a day where we sit around and we have no jobs and nothing at all to do, and computers are just here doing it all. Well, long way from that's my opinion.
Listen, hopefully they find some solace in your answers. I think, and I agree. I think obviously, technology it's definitely part of businesses, and businesses need that to either scale their business and also get insights. And not all AI applications will displace workers. For example, if you're in the manufacturing floor and you want to do something around IoT, around predictive maintenance, to make sure that your machine doesn't break down, to help you save costs in that avenue as well. If you're in, let's say, media company, you want to like distribute broadcasting, AI can definitely be an impact. So not every role will be displaced, but I think, as as Asuquo and Toyyib said, I think being able to be flexible in terms of your career path if you're a customer service rep and then you think that, okay, you feel threatened by your job. Well, the question that you need to be asking yourself, okay, how can I be a valuable member of my team or to my company? Absolutely. Why should they allow me to stay versus replace me with a robot or an AI that could do my job? So you need to be an indispensable candidate for your organization, and I think that's where creativity. How can you provide some? Because one thing AI cannot do is think. They just get information, process it, and give an answer. Yeah, ingenuity, exactly. So if you can find some ways to add some value to your organization, whether it's business strategy or whatever the case may be, that could be one way that you can protect your job from.
And Caleb, I'll add, I think Asuquo was starting to that point. There's already new jobs, I think, even being created as a result of the recent Gen AI boom. Now there's going to be roles of Chat GPT prompters. I don't know about you, but 2 years ago, I wasn't learning how do you
That's a good one.
professionalize, how do you prompt ChatGPT to output such high quality outputs for your day-to-day jobs. Like even now, we've got 30-minute an hour training sessions where somebody will put together some great slides for customers. Oh yeah, I use ChatGPT. Well, what did you input? So now understanding how to put the right prompt inside of ChatGPT and Bard so that your output is exactly what you're looking for. That's now a new skill set. So I've got like 3, 4, 5 slides that I'm learning. Okay, if I want to get this kind of word out, this is what you need to input, and you'll learn that along the way. So new things are already being created, and new industries are going to be built as a result of all of this. So we've got nothing to flip, but let's embrace it.
Facts. And I agree. And I think when we say AI has the opportunity to create new jobs, like let's be clear and say these new jobs are on the higher skilled side. They are generating like people that might need to go to college to study, to code and all these things. What we're saying is we're encouraging those. We're not saying if you're a customer rep, you need to go back to school and learn how to create a new ChatGPT. It's more of think about how you can interact with it and how you can use it to be more valuable to your company. And then let's take like the manufacturing predictive maintenance scenario that you had, Caleb. So if you're a mechanic working on the shop floor, not expecting you to go back to school and learn how to code, but the ask is, how do you work with that piece of machinery on your day-to-day job to make it more efficient? So there's probably going to be somebody in the back end who's actually making the code, sending it out, but you still need somebody there to like oversee the entire flow of everything. And so that is still a skill set that you can benefit in learning how to do, and from where you are in your current role to make you more valuable for your team.
Amazing. Awesome. Well, we're coming up to the top of the hour, so we're going to briefly touch on the last topic around Sheryl Sandberg. I think she's one of my favorite CEOs. I think she's the best CEO of all time, in my opinion. Anyway, so there's an article that came up earlier this week, last week, around Sheryl Sandberg leaving the board of Meta. She spent 14 years as CEO of the company, 12 years as a board member.
They look so happy there. You would never thought.
Yeah, it's kind of crazy, right? 14 years.
Nice photo.
And they're looking at it, said, and just read a quick, excerpt from the article. It says that Sheryl Sandberg is leaving the Meta's board of directors after 12 years, ending her last official role with the company. In the post on Facebook, she says that this feels like the right time to step away and that she will continue to advise the company. Sandberg spent 14 years as Meta CEO and Mark Zuckerberg top lieutenant and 12 years on the company's board. Her role as a board member would officially end in May. After I left my role as CEO, I remained on the board to help ensure a successful transition, she wrote. Under Mark's leadership, Javi, Justin, and Nicola and their teams have proven beyond a doubt that the Meta business is strong and well positioned for the future. So this feels like the right time to step away. Do we believe that is the right time for her to step away, given that Facebook is still in the early innings of the virtual reality thing? They're going to also from a political perspective, obviously. People don't really trust, Facebook as, the social media platform, and there's a lot of dynamics involved. So, and she was a mastermind behind helping to navigate when the Cambridge Analytica issue happened. Happened. She was the one who helped navigate that. So, is it the right time for her to leave the company, or did she leave too late? Is it early for her or late? Yeah, that's my question. So Asuquo, want to tackle this? Was it the right time for her to leave the company, or do you think
So
maybe
I
she
was going
left
to I was going to
devastated?
defer to others because I'm not as close to her career. But what I would say is
Okay.
this: like in reading the uh, the bio that you just shared, 12 years, right, as in the role, and then being on the board. I mean, from just that perspective, I mean, I don't see any issue at the time, and I think it might even be too late, right? Because I'm being contrarian here, but
Yeah, yeah.
yeah, Facebook, has had all the privacy, security, censorship issues, during her tenure. So, I don't know enough about what she did there or didn't do, and so I would just say, hey, look, it looks like a storied career, and I don't see any harm or foul in her stepping away at this time.
Yeah,
Yeah, I mean,
I agree. I think she's had a tremendous amount of success in her role as CEO and on the board. And she was behind like Facebook's rise to top level success with like ad revenue and increasing the number of users, and it did come with that other side of like the Cambridge Analytica and how we're using their data, protecting Facebook user data, that came with it as well. But we know Facebook as they are today a lot because of what she had done and what she accomplished. And so from that perspective, I respect and I understand that she wants to step back. And there also might be an element now where that 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 was that is her expertise. So I wouldn't be surprised if Facebook and Meta now shifting towards like the metaverse and how do we generate revenue that's not so dependent on user data and ads. They're shifting maybe their business strategy around that. So maybe it makes sense to create space for new perspectives. I don't know, maybe she probably did that too if she wanted to, but it's just a new way to think about it. And I think just from like the personal side of things, I think she did just get married as well. So I can see just naturally, she had a great story career and wanting to settle down and be with family.
no, I agree, and I think just to
Definitely
double
agree with
click on
you.
that, I always think that leadership is about knowing when to step away, and I think I agree with Taylor. I rather you step away earlier when you're at the apex, because he left when obviously 2 years ago. I think they were investing $10 billion a month on the metaverse, and then there's a
Metaverse stuff.
report by one of the VC guys who were like, time to trim your company. So last year was a year for efficiency. So he cut costs, and now the stock market, his stock price went through the roof. So I think she left at the right time, at the higher. And I always believe that, you always have to transition. Great leaders learn to move away for the next generation to come in. Whereas we have some leaders who stay there for 50 years. Like, why are you in the company for 50 years? Pass the baton. Mentor somebody to take your role so they can, because you need fresh ideas and fresh blood. So I love that she did it this way. And like you said, I think, in my opinion, there will be no Facebook without Sheryl Sandberg. Straight up. Yeah,
Absolutely, I
it's
agree.
good to, Mark Zuckerberg was an amazing product developer. He developed Facebook product, whatever. But in terms of the strategy, I should mention Taylor. Go to market, grew the company from how many users to like over 1 billion users, monthly active users. This is amazing how she did it. So kudos to her. All the best with her next
Um,
phase. I'll be following her career. So
Yeah.
definitely she's stepping away at the right time, right? But I also think this is part of. I think Mark Zuckerberg is also signaling like, I'm now the adult in charge. Like, it's a
that's
full
true.
takeover, right? Like, Cheryl was the adult in the room when he was much younger, when she stepped in and helped him grow the company. But this is also that baton of, hey, Mark is now, I'm mid-30s. This is my company now. I need to be in full charge. I think you saw the same with the Google guys when Eric Schmidt was the CEO for a while, and then the co-founders came back and took over the CEO role. So it's perfect learning there. Big takeaways. I mean, she's also been an inspiration for a lot of women in tech and has done great things and made a lot of money. So if you want to step away, CEO job at a publicly traded company is stressful. Take the money and go enjoy and take a few
Yeah.
years of fun out.
I like that. I like that. Well, any final thoughts before we
Actually,
Suko, any final thoughts?
I'll turn it to Taylor and Asuquo to
Yeah.
both the answer. I guess big takeaways around you both have achieved. You guys have both built and continue to build incredibly successful careers, right? We talked about stepping away, and I think with Sheryl Sandberg's career being another great one. any big career advice that you guys are following now, or you guys would love to share with the audience around how you guys are thinking about risk, how you guys are thinking about careers and great achievement along the journey?
Okay, I'm not contrarian, but I'll say non-traditional response here. I think for me, what my career and what my life is about now is just, you know, trying to achieve what God's will for my life is, right? Trying to think about what I'm doing and what I'm striving and what I'm putting my energy towards in a way that's beyond sort of just, achievements here on earth. I see my goal in life to have impact beyond just myself and gathering as much money as I can, right? God has been good to me. I'm comfortable, right? So I'll just end by something I learned today in church is that when you think about anything in life that you're pursuing, your career, your family, even performance goals, you should always just think about, remember that who the source is of everything, right? Your career is not your source, it's not your source of meaning, it's not your source of identity. It really is a resource that God has given you to give back and do his will here on earth. And he is the one true source. So for me, I think about my career within the confines of how can it help me do what God has put me on earth here to do. And so with that in mind, I just reflect on that, and I use that to guide sort of my next move from the little projects I'm doing to the big ones. So that's where I'll just kind of leave,
Nice.
us with here.
Love it.
I love that. And I also think of career as a journey. It's as a journey trying to figure out how to create impact that, like you said, Asuquo, goes past myself. I think growing up, like our parents' generation, it was a lot of get a job and hold on to it, stay there for a long time. I definitely heard that from my dad several times about why are you leaving this good job? But I have had many different seasons and types of career, aerospace manufacturing, consulting. Um, and I'm doing that in an effort to get a little bit closer to what I think will be my life's purpose. If you ask me today, I really like transformative change. I really like helping people and teams really figure out how they can just work together better at the end of the day. And continuing to make decisions from that space. How can I get better at that? And maybe that leads me to somewhere outside of consulting one day. But it's just keeping that in mind about, I know this is what gives me joy, makes me feel fulfilled. And maybe it looks a little bit different in different chapters of my life as my personal situations also change. But I look at it as a journey and getting a little bit closer to that life purpose at the end of the day.
Yeah, I mean, I agree, and just to add some footnotes, Toyyib, to the question that you posed. I think I always tell people that you always want to work backwards from what you're passionate. So let's say if you want to become a doctor, or I don't know, basically whatever your gifts are, just write it on paper. You put your. I remember after I completed Columbia University, I had a 50-year plan. I had a vision. This is what I want to be, and I had a plan in place. So you need to have a vision for what you want to become in future, and again, your vision has to scare you. If your vision does not scare you, it means that you're being selfish. There's a difference between having a vision and ambition. Ambition is for yourself, it's subservient. Oh, let me get a Lamborghini. Well, or let me get a big house mansion. No, it's not about you. It's about helping others. So figure out what your purpose in life is, put it on paper, and put a plan. Again, the plan might not go in a straight line. You might meander around. You might be in the wilderness for some time. you might not have the right people around you. Or again, it's not going to be a straight path. But if you have that purpose, the universe will align itself. I remember my vision was to build the biggest real estate company, and for some reason, the universe will start aligning themselves together. And I found Toyyib. We built some relationships. So it's always good to have a purpose, put it on paper, have a plan in place for how you're going to achieve it, and every day keep chipping away, chipping away, and then you're going to be successful. And you always remember that the vision is not about yourself; it's about helping others. How can I use my gift to serve the world? And through that, you're going to make the money. If you want to make some money on the side, you can make money. Don't chase money, chase the vision, and the money will come in return. So that's just my 2 cents on that.
Put that on a wall somewhere, Caleb.
Yeah.
Don't chase money, chase the vision.
Yeah. So again, so that wraps up episode 3 of the War of Weight podcast. We're excited that you guys spent about an hour with us today, and we hope you enjoyed every bit of our podcast today. Remember that the journey to wealth is always unique for everyone. So keep riding that wave with us. At World Weight Podcast, we are always eager to feed the mind and challenge the time when it comes to investment philosophies, market insights, and real estate strategies. So please, if you would, like and subscribe below, and spread the word about World Weight Podcast. Share that with your friends, your family, and also your fellow enthusiasts. So with that, we'll see you on the next episode 4 coming up next week. Bye-bye.